Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, let me introduce myself. My name is Eka Susanti with NPM 2241106 from Management Class 22. Here I will explain the material regarding the legal position of tax, the differences between taxes and retribution, tax collection requirements, tax resistance, direct tax and indirect tax, legal position of tax, definition of legal position of taxes. In legal states, all matters must be established through legislation, including tax matters. In Indonesia, tax collection is regulated by Article 23, Paragraph 2 of the 1945 Constitution, which states that taxes and levies for the benefit of the state must be regulated by law. This emphasizes that the authority to collect taxes cannot be done arbitrarily and must have a clear and valid legal basis. Objectives of tax regulations. In tax regulations, the government establishes laws aimed at ensuring the smooth and efficient collection of taxes. Additionally, tax laws provide legal guarantees for taxpayers, including protection against arbitrary treatment. Thus, tax collection is not only an obligation for taxpayers, but also has a legal foundation that ensures transparency and fairness. Principle of justice in tax collection. One of the main principles in the legal position of taxes is justice. Tax collection must be conducted fairly, both in the creation of laws and in their application. This includes the imposition of taxes on all citizens who qualify as taxpayers and the provision of appropriate sanctions for violations. Importance of confidentiality of taxpayer information. In addition to the principle of justice, there are guarantees of confidentiality for taxpayers. The information held by taxpayers should not be misused by authorized parties. Tax laws stipulate that personal and financial data of taxpayers must be kept confidential, except in certain situations allowed by law for tax audit purposes. Legal protection for taxpayers. Tax laws also regulate the rights of taxpayers to file objections or appeals if they feel there is an injustice in tax assessments. This protection affirms that every citizen has the right to receive equal and fair treatment under the law in tax matters. The differences between taxes and retribution. Definition of taxes and retribution. Taxes are mandatory contributions from individuals or entities to the state collected under the law without direct compensation. Taxes are used to finance government public expenditures, such as infrastructure and public services. Conversely, retribution is a charge imposed on individuals or entities in exchange for services or facilities provided by the government, such as parking fees or waste management fees. Objectives of collection. Taxes have two main functions: budgetary, fiscal, and regulatory. Taxes help regulate income distribution and influence economic and social policies, such as through tax incentives for investment. Retribution, on the other hand, aims to cover the costs of providing facilities or services that the government provides directly, such as market maintenance. Legal basis. The collection of taxes and retribution is regulated by law. However, taxes generally have a national scope and are managed by the central government, such as income tax. Retribution is more often local and managed by regional governments, with specific regulations according to the needs and services provided in that area. Type of compensation. Taxes do not provide direct compensation to payers, as they are used for public interests broadly. Meanwhile, retribution provides direct compensation or facilities that can be enjoyed by those who pay, such as parking access or the use of other public facilities that charge fees. Examples of taxes and retribution. Taxes include various types, such as value-added tax VAT and land and building tax PBB. Retribution includes parking fees, market retribution, and health service retribution at local government facilities. Tax collection requirements. Justice in tax collection. Tax collection must be conducted fairly to avoid disproportionate burdens on society. This principle of justice is regulated in tax laws and must be reflected in the implementation of taxes. Fairness means that every citizen who qualifies as a taxpayer must be taxed without discrimination, and sanctions for tax violations are also applied uniformly according to the severity of the violation, not disrupting the economy. Tax collection should aim not to disrupt economic activities, including production, trade, and services. Tax levies that do not hinder the pace of business, especially for small and medium enterprises, are crucial because this group is a major part of tax contributors. Therefore, taxes must not harm public interests or obstruct business growth. Efficiency of tax collection. The costs incurred for tax collection must be efficient. The tax collection system should be made simple so that collection costs do not exceed the amount of tax received. This efficiency also includes ease of calculation and payment times so that taxpayers do not face difficulties in fulfilling their obligations. Simplicity of the tax system. Simplicity in the tax system is key to increasing taxpayer awareness. A simple system facilitates the calculation and fulfillment of tax obligations by the public. For example, simplifying the value-added tax VAT rate to just two rates, namely 0% and 10%, helps create a system that is easier to understand. Tax resistance. Tax resistance, or the refusal to pay taxes, has historical roots in social, political, and ethical objections to taxation, often seen as a protest against government policies or perceived injustice. This resistance can manifest in various ways, from symbolic protests to outright refusal to pay certain types of taxes. There are several forms of tax resistance, including passive and active resistance. Passive resistance typically involves delaying or minimizing tax payments through legal means, like deductions and exemptions, to reduce the tax burden. On the other hand, active tax resistance can entail refusing to pay taxes outright or engaging in civil disobedience. While passive resistance is generally lawful, active tax resistance may violate tax laws and incur penalties or legal action. Both forms of resistance highlight individuals' desire to have a say in how their tax contributions are used. Direct and indirect taxes. Definition of direct taxes and indirect taxes. Direct taxes are taxes whose burden cannot be transferred to others and must be paid directly by the taxpayer concerned. The main example of direct tax is income tax (PPH). In contrast, indirect taxes are taxes whose burden can be passed on to others, such as value-added tax (VAT). This type of tax is usually imposed on goods and services consumed by the public. Tax collection procedures. The collection procedures for direct taxes usually involve self-assessment, where taxpayers are responsible for calculating and reporting their tax obligations. Meanwhile, indirect taxes are usually collected at the point of sale or service, making the collection process simpler and more efficient. Examples of direct taxes. In Indonesia, examples of direct taxes include individual income tax (PPH 21), corporate income tax (PPH 25), and land and building tax (PBB). These taxes are imposed based on taxpayer income or ownership of assets. Examples of indirect taxes. Examples of indirect taxes in Indonesia include value-added tax (VAT), luxury goods tax (PPNBM), and excise taxes on certain products such as tobacco and alcoholic beverages. Indirect taxes are usually borne by consumers through the prices of goods and services. That's all my explanation. Thank you and wassalamualaikum warahmatullahi wabarakatuh.